What's up, future self and random people of the internet? Today, I'm going to be reviewing the trades that I took this week. I ended plus 4% for the week, but plus 3% for the entire year. So I was down. Now I'm in profit. We'll just, see what happens after that. So first, I'm going to review the trades that I took and lost, and then I'm going to review the trade that I won, and then I will just go through and see the direction that I predicted and the direction that the stuff actually went in and kind of go through that with you. So first, the trade that I lost, there were two trades, one on GU and one on GJ. This one on GU, what I was thinking is this is kind of the last weekly area where it has a chance to bounce from and continue its push bearish. So I thought, okay, sure, the daily is bullish, but we're at this high area for this leg of the bullish move. And this is a pretty solid rejection area. So I'm thinking it's possibly going to come back. It's likely to come back to this area where you would have seen this EMA here. We would have seen a key level. And I just predicted it would probably take this weekly area to push down, come back. And if it wanted to continue bullish, at least it would have a retracement. Or it could just continue bearish and continue the trend on the weekly. Don't know, but I decided that this counter trend trade would be a higher likelihood counter trend trade than just a random counter trend trade, basically. From there, I went down to the 4 hour. I saw this kind of head and shoulders, and I was like, yeah, okay, solid. Not too many gaps down here when we're looking at the 4 hour, but I still thought it would have a good amount of time to push. This particular part, like right here, I really liked how it formed. We were bearish at that point, and so it looked good to me. I went down from there to the 30-minute, found a solid place it looked like for entry, and then I just put my stop loss above the 4 hour zone. I let this thing play out for a little bit. The first time I tried to take it, it got super close right here. So at lunchtime, I just decided to hop out that trade because had it come back up here, then it likely, it wasn't going to be doing too much. My thing is, if it gets to a 1 to 2, I probably should just say the trade is gone. But at this point, it had only made it to a 1 to 3 with it coming back here. So I decided to look at it again. Now, what happened next was essentially I saw the trade. I was like, okay, yeah, we're kind of in that area. We're close to that area. Let me go ahead and put something there and see what happens. And then after that, since I had saw this H1 inverted head and shoulders, which I had saw before deciding to put something there, before ever entering this trade, I was like, well, maybe I should have waited for a shift of structure. So here's my question for this trade. I waited for the shift of structure on the M15, but my entry was on the M30. Should I have waited for the M30 shift of structure rather than the M15? That's something that I'm just going to have to continue to back test as I'm trading more and more. So there was a shift of structure on the M15. Again, we had this inverted head and shoulders, and the reason this is here is because I like to think the strength of a head and shoulders or inverted head and shoulders is 2 times the length from its head to its neckline. So that's what I did here, figuring, all right, well, the strength of this head and shoulders should end about right here. So it's probably okay if I were to have something here, considering my stop loss was there. That was the reasoning for immediately hopping in. But once I immediately hopped in, I was like, well, this thing's kind of bullish because we're kind of here. I'm like, this thing is bullish. I should wait for it to shift structure. I got out, waited for it to shift structure. Once it shift structure with a closing candlestick, again on the M15, I just hopped back in and was like, all right, whatever happens, happens. It lost in its entirety. The M30, you could argue maybe here had a shift of structure, but personally, I don't think the M30 really had a shift of structure, and it just continued bullish, which is why it's like, all right, if you're going to take it on the M30, why wouldn't you wait for the M30 shift of structure? But I don't know if it's necessarily all the time or this is just how this trade played out. The next trade I'm going to discuss is GJ. Now, GJ I actually took several trades on. GJ, the first trade I took was this one. I essentially had the same top-down analysis for all of these trades, so I'm going to run through that real quick, and then I'll break each trade down as quickly as possible, because honestly, yeah. All right. So for GJ, we see the weekly is bearish. We see that the daily is bearish. So I'm thinking it's probably a good idea to take a sell. Here we kind of have a structure point. We go back to the H4 and we see, okay, H4 pushed up. It's technically bullish, right? This is pushing. This didn't pass over here, so we're looking at something bullish, but it did have this double top and it did have a lot of gaps, creating a lot of downside potential. From here, I waited for this thing to push down to kind of get in here. Now realistically, if I had hope, I guess I probably could have entered somewhere over there. I didn't like it. Price action looked ugly to me. I waited for it to completely break under and come back up. It did right here. And this was a very good H4 rejection candlestick. So I was like, all right, well, I clearly can't get in on this H4 rejection candlestick. The price action just wasn't there for me. It wasn't going to work for me. Price was down here at this point. I'm like, if it comes all the way up here, it's probably just in this move. I'm thinking to come all the way down here at the very least. So I decided to hop in a quick scalp on the M15. I didn't wait for entry confirmation with a break of candle. I just kind of set the zone and let it go. I had to go to work. What ended up happening is it did eventually give that break of candlestick confirmation, but either way, it went, slapped through the stop loss, lost 1%. Next thing I did is I came over here. I saw this had potential. So if we go back to the H4, I avoided a loss because after losing on the trade that I shouldn't have taken because it was a scalp, I looked and was like, well, we have this pushing here. This would have been kind of the area, but if we come over here and look, it's tapping at times that like I'm asleep. Over here is 2:30 when it's actually in there. I'm not paying any attention to the chart. So loss was pretty much avoided here. I wasn't paying any attention or tracking that as an entry. So then the price came up. It did a nice little liquidity grab, mostly of this area. Comes up, gives two beautiful rejection candlesticks. I'm pretty sure that's some form of formation, but I see rejection candlesticks. So I'm like, okay, this is great. This is great. Let me see if there's a place to enter. Yeah, there sort of is, but it looks ugly. So what did I do? I went to UJ and I started looking at other things. I did. This was the same type of thing though, right? We had bearish structure on the weekly, even a structure point on the weekly for where we were looking, sort of. A better way to say this is that it had already went up, tapped this structure point, and it was looking to push away from the structure point. So I would still consider that in this case. And then we had the daily that's pushing down. Great. The only thing I was kind of concerned about was like, okay, right here, there's doji, which means it could be losing momentum. It could want to switch to the upside. So I come further down here. I look, I go, okay, this could potentially be, you know, like a double top. We'll see if it comes back and then pushes down and continues. Again, a lot of downside potential with those gaps. I did the same thing. I thought the market structure looked a lot better. Not only that, but this is taking liquidity right here for this entry. It just never came back and tapped me in, but it did go into my direction. So GJ had done, again, I didn't get in this because the market structure just didn't look as good to me, but it would have tapped me in. It would have continued to go. This right here is, this right here is a trade that I took, but I got out. This was another scalp. Now, why would I take this? I don't know, man. These scalps, they were just looking so good and so juicy. And it's like, I have scalped before. I do know how to scalp. But I really need to focus on swing trading because I just don't have the time to scalp. Usually, normally, realistically, this kind of just showed up and I decided I wanted to be a part of it. So this M5 here, I did the same thing that I always do. I entered, I used a break of candlestick, entry confirmation. It started to fall, as you can see. So we entered here, it started to fall, it came back for a second, it started to fall some more. And to be honest with you, I got out kind of around break even. The reason for that is because this trade was taking far too long and I shouldn't have been in a scalp anyway. The last time I was in a scalp, I lost, whatever. When I got out, I had high intuition, inkling that this thing was going to win. I believe that it was going to win. It was going to hit that 1 to 3. But I was like, I shouldn't be scalping anyway. I can't properly monitor my trade or manage the trade. So I'm just going to get out. So I got out a little bit above break even. And that was that. But as you can see, this scalp was good. It did end up going to that 1 to 3. I just wasn't able to properly manage it, so there was no reason for me to be in it. Had the scalp pushed a little faster, went quicker, I might have been in it and stayed for that 1 to 3, but I wasn't about to just let this thing play around again while I was at work and, possibly give me signs, I guess, that it was going to go hit my stop loss, and I'm not there to see it. But again, I shouldn't have taken this trade. I shouldn't have taken either of these trades because they were not a part of my new trading plan to be a swing trader. It's just the time that I have. It makes sense. If we go back to the H4, we can review the trade that I actually did take, and that is right here. Now, this thing was beautiful. This thing happened on Friday. It's the same thing. Weekly's bearish, daily's bearish. Now we're down to the H4. H4 still had a bunch of potential to the downside, filling in those gaps. Here's what I was thinking. I see two beautiful rejection candlesticks once again. I come down to the H4, I look at it, I come down to the M30, I look at it and I go, okay, there is an entry. It's a pretty solid entry. I like the entry. I like the break of structure that goes with the entry. It's a pretty solid entry. What I wanted to do, or what I probably would have done had this been Monday, is put that there, which would have been above the H4 high, and then brought this thing down here and waited for it to tap. It's a safer entry. It still would give you that 1 to 3, but with it being the Friday, it didn't have time to do all that, and I knew that. So with such a nice entry, I decided, okay, this M30 can also house the stop loss. It's higher risk. It's a tighter stop loss. Higher risk, there's usually more reward when thinking about what could happen to the downside. Now, I don't know why, but maybe I was trying to get more into the swing trader mindset. I was like, you know what? I'm going to put my take profit all the way down here. Something a little bit ridiculous, a little bit crazy. At lunchtime, I'll come back, I'll review. If it looks good, if it hit a 1 to 3, I'll just close it out. If it hit a 1 to 4, I'll close it out. Shoot, at this point, it's Friday. If it's hit a 2.72, or maybe it went down, hit a 1 to 3, and retraced to, 2.72, I'll get out. It is what it is. It's a little bit of profit. It'll do the trick for now. And again, that would have gotten me close enough to break even for the entire year. 1 to 3 would have put me at break even for the entire year. Well, apparently my goofy little take profit wasn't so goofy because it pushed down amazingly all the way down here. By the time I had lunch, I said, oh, I'm taking out of this trade actually with a 6.69 RR. That is my highest risk to reward. So a few things that come out of this trade that I want to look at and backtest is one, when is the best time to use a tight stop loss? Is there times where certain trades should have a tight stop loss, or is there time where, a higher stop loss is really warranted? In this case, the tight stop loss was within the zone, was above the zone. So I was like, okay, yeah, sure. It's probably fine, more than likely. But yeah, just stop loss placement is something that I want to look at, whether it be above the zone, whether it be higher or lower time frame, or whether it be above the high or low is kind of what I want to look at. And I think it is going to depend on the setup. But this thing slammed all the way down here to 1 to 12. So had I don't know, waited until the market closed, I could have got out at a 1 to 12. I wasn't going to do that. I did believe that down here was the ultimate place it was trying to go, but with it being Friday, it didn't have time to get there, so I'm not worried about it. Potentially for this upcoming week, I might look to take a trade from here down to here, but we'll see. There's now a lot of upside potential for this thing to kind of come up here and fill those gaps, so we'll see. To be honest with you, I had another 10 to 15 minutes left of this video. However, that concludes the portion of the video where I talk about the trades that I either took or didn't take and why. The next half of the video was me pretty much going through all of the trades that I had on my watch list and seeing if my prediction for the market direction was correct. Now, this took like 10 to 15 minutes, and honestly, I might include it in the future, but for now, that just seemed like way too much time for me to really not get the point across that I think in the most best and concise way. So I want to do that right now. The reason that I went back and looked at the direction versus my prediction is because if you can understand and predict the market direction, you pretty much are almost there. That's like 80% of it. When it comes to the technicals, knowing market direction is the most important thing, in my opinion. Once you know the market direction, all you have to do is find a way to enter, put a stop loss that makes sense for the market direction that you understand, and a take profit that makes sense for the market direction that you understand, for the situation that is happening in that market. So, an example of this is if we have 15 trades and say 5 of them you don't get correct, right? 5 of those trades you were completely incorrect with the market direction. A lot of the times when you're incorrect with the market direction, it'll tell you that before you would be able to hop in a trade. But let's say 3 of those trades gave you an entry. Well, the other 10 that you could have possibly somehow hopped in, right? If you had 10 trades that you were correct with market direction on, let's say only, let's say 3 of those trades gave you an entry. If you're looking for a 1 to 3 and you have 3 trades that gave you an entry that were wrong in the market direction, so it would have hit your stop loss, say you trade 1%, you're down 3%. Well, let's go look at those other 3 where you were correct in the market direction and it gave you an entry, so you took it. Well, 3 times 3 is 9. So 9 minus 3, the trade that you lost, you are up 6% still. That's why it's so important to understand market direction, because once you understand market direction, you can literally figure out a strategy that gives you your entry, take profit, and stop loss in a way that you understand. That part is not difficult. Understanding what's going on in the market is what's difficult. Anyway, I appreciate you for watching. If you like the content, do whatever you want to, but I will catch you in the next video. This trade, I actually wanted to hop in, and I had put a limit there, but right before I left it, I decided to go. I'm just going to review it real quick. This is bullish, but in my opinion, this could be an inverted head and shoulders. I just want to say it hasn't really been confirmed yet, and when it's not confirmed, we can't trust it yet. So I'm a little sketched that that thing might go bearish. This was higher high, higher low. Of course, this is what I thought was going to happen at first, a little break above. It didn't end up doing that, which is perfectly fine. So this direction was wrong. But once we come down here, once I ignored the fact, right, I see, okay, we're playing underneath, we're playing under here. Ooh, what's going on? Well, we have this inverted head and shoulders on the H4. I'm not paying too much attention to it, but the way this thing came and started running away, it just looked beautiful to me. So we have this higher high, higher low, and this is an area for the daily to potential reverse. So I'm thinking, well, this is the weekly daily area. This is probably where it wants to go back to. I know that the H4 is bearish, but I also see that the H4 right here has a nice little level that it could potentially go up and use as resistance that it did. So I'm looking at this trade and I go down to the M30 and even the M15 and I see that bullish market structure is kind of being created, but you'll know on both the M30 and M15 this thing is still bearish. The reason I didn't get into this trade is because the H4, the M15, and M30 were bearish, while the weekly and daily were bullish, and I had, a good idea that this would probably go up here. I just haven't been in a lot of situations with a trade like this, so I wanted to watch it and see what happened. Clearly it would have played out for both of the entries that I anticipated. One was only a 2.17, which for a counter trend trade, which would have been counter trend to the H4 and M30 and M15 for a little bit, but eventually it turned bullish. It's not too bad. And then 3.57 again over the 1 to 3 that I would usually aim for. So this is a trade I didn't take. I did think about taking, but at the end of the day, I decided it was just better for me to watch.